Hey guys, all right, let's talk about the trade setup that I'm working on. This is the opening range breakout of the Nasdaq. And the reason why I'm focusing on this trade today is because we have a break of structure to the upside. And it's not just a break of structure. We have a formation that broke structure, and we have now just plowed through that formation that had broken structure. Now, if you've watched the previous videos in the course, you'll understand what I'm talking about. But if you don't know what a formation is, then let's go over that right now. So here we've got this drop base rally that broke through all of this structure to the left here. Okay, so let's shrink this down. Fancy editing time. So let's see, grab your purple line. We broke this. We broke through here. We broke through here. Okay. And let's focus in on that now. Do you see this right here? This is just a break of structure. This little formation here didn't break through anything, right? This one did. You've got a little rally base drop here that broke structure right here. See that? Whoops. So we like that. So we've got now a formation, rally base drop, that broke through structure to the downside. Then it formed a drop base rally and broke through that formation. That right there is the best way to find supply and demand zones when you're a supply and demand zone trader. And it's not just about breaking structure. It's about breaking through a formation that broke structure. And I'm going to say that in almost every single video because it's made me a lot of money, and you need to know about that. This is the micro Nasdaq, and it's the same as the regular full contract Nasdaq. Okay, so you'll see the same thing on the full contract chart. Now, what else did it break? Well, what do we have here? This is the 15-minute chart. We've got a rally and a drop. Now on the 5-minute chart, that's probably something a bit more significant, right? Like right here. Here we've got a rally, base, drop. And this is a formation that breaks through all of this structure here. Okay, so that's a formation that broke structure. What happened? We broke through it. Okay, we broke through that. We broke through this formation that broke structure to the downside, meaning that upward leg is going to be very strong. So we want to look for demand zones. What else did it break on the 5-minute chart? Here we go. Rally, base, drop. And that didn't break anything, right? It might have gone through this little thing right here, this little rally base rally here. So that's good. But this right here, rally base drop, broke some major structure to the left. Okay, so we broke through that as well. We broke through that, and we broke through this formation that did a little number over here. Is that the last piece? Yes. Okay, so we broke through this formation down here, formed a leg that broke through a lot of structure. Let's get rid of all these lines. Now what do we have here? Now we've got something called the opening range breakout. The opening range breakout is the first 15 minutes of the open. And the opening range breakout tool draws a couple of lines on the opening range, the 15-minute opening range. The logic being here is when you get a breakout of the opening range, we want to see some sort of retest into that range and then a move up. And we have a lot of evidence saying that that is going to be true. It pulled back, it broke out, it pulled back into the range, really right there and right there. And I guess you could say it's working off of, it's working off of this rally base rally here on the 5-minute chart. It's a rather big zone right there, okay? So that's what it's working off of right now. It may take off. It may completely take off from there. So if you took the whole range of this, you're in this trade right now. If you go to the 15-minute chart, you see something very interesting here. You see a really nice drop base rally that broke through this structure and everything else that we spoke about, and this here as well. If you take the Fibonacci retracement level and go from here, swing low to swing high, you've got that 50% retracement level right here. That's in that demand zone. You've got the 618 that's in that demand zone as well on the 5-minute. But look what else you've got on the 15-minute chart, the higher time frame. Remember, higher time frames always take precedence over lower time frames. A moving average, a simple moving average or an exponential moving average on the 1-hour chart is much more significant than the same moving average on a 5-minute chart. So the higher the chart, the higher the time frame on the chart, the more significant any type of support and resistance level or level of imbalance is going to be. So remember, support and resistance is different than levels of imbalance. Levels of imbalance are represented by formations like this drop base rally here. So I am looking at this. I am looking at this demand zone on the 15-minute chart. It's at the bottom part of the opening range, and it looks really good. So this here caused the leg that broke all that structure, and more specifically, broke through those formations that broke structure to the downside, making this leg to the upside very significant. So that is where I put my entry point, right at the top, the proximal line right here of this demand zone. What else do we have? We do have, you can see right here, we do have a 786 retracement level right at that proximal line. That's a great spot. That's a great spot to take your entry. Okay, so it's in the general vicinity of that proximal line. Great. I'm putting my line right at the top of that basing candle because candles take precedence over any type of imaginary line like Fibonacci. Okay, we always use structure for our entries and for our stop losses. And that is the story here. Now I am putting my stop loss under this candle right here because look at how close that structure is. So I'm just going to use the structure. This is well within my risk tolerance, $144 risk. And hopefully this works. It might not work. Okay, this might never come back. It's hitting that, it's really reacting off of that 5-minute zone right here. So you might be asking yourself, well, Chris, which one should we take? Well, you can take both. You can take this one and take your 2-to-1 and scale out of the position, or you can take the last one. You'll never know. That is the level of uncertainty that you have to get comfortable with. So that's a healthy level of uncertainty. That's a healthy level of uncertainty. which zone, according to my strategy, is it going to hit? Well, I don't know. And you have to be comfortable with that. An unhealthy level of uncertainty is when you try to figure out every single variable, every single outcome. If you're trying to figure out every single outcome in your strategy and account for that, that's an unhealthy level of uncertainty. Okay, so you cannot do that to yourself. You'll usually see people with a ton of indicators on their chart, and it's like there's no reason to have 5 different momentum filters on your chart. The MACD does a great job for momentum. You don't have to have a MACD and several other momentum indicators. Just like you don't have to have a bunch of different trending indicators, like unless it's part of your strategy. But you don't need it. You need one. You need one for every angle of the trade that you want to look at. What are the 2 main components of every strategy, right? It's usually momentum and trend. And yes, of course, price action. Some people just use price action. That's it. Some people, it's like, I'm just using supply and demand zone. I'm not looking at anything else. Okay, that's cool. But if you wanted to, then you just need one. You just need one indicator to look at momentum, one indicator to look at trend. You don't need 5 on the chart, to look at one element of a trend. So here we go. So we're pulling back now. We're pulling back deeper into that opening range. And all you can do is your analysis, place your entry, and then that's it. You leave it alone. So I'm going to pause the video here, and we're going to watch, and we're going to see how this trade pans out. Okay, we're getting close. It's reacting off of that 618 retracement level, but there's really nothing there, right? There's really nothing there except this long bar. The market can do anything it wants at any moment in time. So could it reverse from here and go completely up and skyrocket to the moon? Yeah. You'll never know. Again, it's a level of uncertainty that you have to get used to, and it's a healthy level of uncertainty. You don't concern yourself with that. Just concern yourself with the process of your trading. Just concern yourself with the process of finding breaks of structure that are actually formations that broke structure, and then seek out those supply and demand zones. Now, the other thing I wanted to show you here, take a look at your CCI indicator on your trending time frame. Okay, this is the 1 hour chart. That's what I use for my trending time frame. This is the 4 hour chart. That's the highest time frame. Okay, now look at the CCI indicator here. Don't focus on this right now. Here's your CCI indicator. It is breaking past that 200 mark, and this pullback into the demand zone here is taking place above the positive 100 line. We love that. Because that means you're pulling back into a very strong upward movement. Okay. And if you look at the 1 hour trend on your 1 hour trend cloud, look at what we've got here. We've got price has broken above that 50. We've got a crossover on the cloud, and we're going to the upside, right? If I turn this off, these confirmation entry candles, you'll see candles are green. Your candles are green. Okay, so let's remove this and take a closer look at the structure of these candles here. Here's the situation on the 1 hour chart. This is the bottom part of the upward move that broke through all of this structure right here. So we're in really good shape here. We're in really good shape. We really want this to pull down, to hit that 786. We've got 25 minutes left in this candle. We would love to see a pullback into this zone and then see this candle, reverse and become a positive candle or a more bullish looking candle. So that's the situation. And let's get back. Okay, so again, 1 hour chart is breaking above the 50. We're above the trend cloud. Candles are green. Start looking for demand zones. That's one piece of information. Another piece of information, CCI indicator broke above that 200, and now we're pulling back into a demand zone that is in a very strong upward movement. How do we know it's a strong upward movement? Because we are above the positive 100 marker right here, this green line. So any pullback that takes place into a demand zone and the CCI indicator is above 100 or above the zero line at least, you're in great shape. You're in great shape. That should give you the confidence that you need. Focusing on the 15-minute chart and the 5-minute chart now, what do we have? We've got the zone right here. Look at how it, oh man, it it could totally reverse here and go up, and we missed the trade. That's trading. That's trading. But let's take a look at our cycle indicator and our momentum filter on the 15-minute chart. We're still cycling down. This is an upward trend that is cycling down. What do we call that? We call this a correction. Whenever you are cycling down in an upward trend, that's called a correction. So we're in a correction right now, and that's exactly where we should be. We're early in this trend, okay? And we are pulling back into strength. 5-minute chart, we've got an inside bar here. We really want to see another push down right to that 786 level. And it looks like it really wants to break above and start to take off. It just hit, see how it hit that support level? This is considered a support level on your cloud on the 5-minute chart. We're getting a signal. So, it's time to make a decision here. Do we take, we have to wait for this candle to close. If this candle closes with a signal, we could take the trade. We could take the trade next bar market to the upside. And that would be the risk that you would have to take. But we've committed to this structure here. And this is structure on the 5-minute as well as the 15-minute. Now take a look here. What has it done? Let's open this up. It's gone into, see this rally-based rally here? That's where we're at on our 5-minute chart. Rally-based rally, hit that 618. It's reacting off of that. That's what it's reacting off of right now. So you could have tightened it up that way. That would be another way to look at it. You could have taken this whole thing. All right. You can take it from wick to wick on that rally base rally. Perfectly legitimate. And this looks like a move out. So, this is the process. We're going through a process. We're having a discussion about the context of the trade, and that's all you can do. This is what trading is like when you're trading live. Look at it on NinjaTrader. Look at that. Very frustrating when something like that happens, right? Pulls down, just misses your entry, might not have wanted it. But we don't know yet. We don't know. I'm going to pause the video. Oh, here we are, making another move. Making another move down. So you see how your mind could change second, every minute by minute, candle by candle, your mind could change. Like, oh, here it comes. Oh, no, it's not. Oh, wait, yes, no. Okay, so that's another unhealthy level of uncertainty. You cannot do that to yourself. You'll wear yourself out. If you have that type of mentality, which everybody does, everybody goes through that at first, but you've got to be aware of that. And when you're aware of that, you can say, I made a commitment, I made a promise to myself, just like we were talking in some of the other videos about making promises to yourself and keeping those promises to yourself. That is a form of discipline. And again, there's this Stoic philosopher that I quote all the time, and I say this to myself in the morning. We treat the body rigorously so that it does not become disobedient to the mind. We do hard things. That's what it's translating into, right? We do hard things so that we discipline our mind to do the things that we don't want to do, right? I don't want to get into a shower and blast myself with cold water, right? But I do it anyway, because when you have to sit down and do work, you may not want to do it at that moment in time, right? You may not always want to go to the gym, but you do it anyway. You got to do hard things so that your mind does not disobey your body, or your body does not disobey your mind. So very important stuff. If you adopt that philosophy, you'll have a lot less trouble. You'll have a lot less stress in your trading performance, because you're going to say, I made a promise to myself. This is my commitment. I'm following my rules. This is within my risk tolerance. We've got a 786 retracement level at this 15-minute demand zone. We're taking this demand zone because it broke a formation that broke structure to the downside. And now we're taking this formation that broke through those structures. That's it. That's it. That's a commitment. We're not moving our stop around. We made a decision. It's well within our risk tolerance and our trade plan. And that's it. So if you over leverage yourself, on this, and this was $500 or $1,000, you're going to be so stressed out. If it doesn't work, you're going to say, I'm a loser. Why did I do that? I'm a failure. All these crazy things and crazy shitty thoughts are going to go through your head. You don't want that. Follow your plan, make promises to yourself, keep those promises, and it will translate into other parts of your life. You keep a promise to yourself, you discipline your body and your mind, and you will be able to do the same and keep those promises, not just to yourself, but to your family, to your clients, to your business. And I think that's important for a person, no matter who you are, a man or a woman. you should be that way. You should be disciplining yourself in some sort of an art. If you like to paint or play the guitar, Musashi talks about this in the Book of Five Rings, right? He says if you want to be a great swordsman or a great martial artist, um, he was talking about swordsmanship. He wasn't talking about martial arts, but as a martial artist, you can relate, and you can. And what he said was, if you want to be a great samurai, a great swordsman, then learn to paint. Discipline yourself in another art form, whether it's sculpture or music or physical conditioning, whatever. So I love mixed martial arts and I love mixed martial arts conditioning. So I found a gym that specializes in that. And you've got to set time aside to do these hard things. And then all of this becomes much easier. And that's really the lesson and discussion for today. So hope we're not getting too long on these videos, but there's a lot of valuable information in having these live discussions. So I think it's important. Okay. So here we go, making a move towards our demand zone. Finally, hasn't hit that 786 yet, but it is making a move. Really wants to, if it hits that demand zone, it really is just squeaking close to it and backing off and squeaking closer and backing off. Got a really good chance at this, guys. Got a really good chance at this. What's our CCI indicator looking like? Look at that. That's beautiful. That's beautiful. All right, let's see. Open this up. Focused in on that. That's all you can do. This is what it looks like on NinjaTrader. Look at how close. Let's watch it on NinjaTrader. Look at how close. Just a few more ticks. A few more ticks. Just waiting. Just waiting. So yeah, sticking to a plan. This is kind of boring, right? This is like the boring part. Just waiting. Oh, so have a book. Book of Five Rings. Fantastic book to read. Was written over 2,000 years ago. 2,000 years ago by Musashi, who was a samurai, and he invented a two-handed style of sword fighting. He's considered a sword saint in Japan. And this is a very trendy book to read if you're a Japanese businessman. It's like this sort of underground, trendy book to read if you're going to business school. So very cool stuff. The Rule by Larry Hite. Larry Hite, amazing guy. He was the first hedge fund manager to reach $1 billion in assets. And excellent book. Way of the Turtle. Excellent book also. That was an experiment that took place back in the 1980s by Richard Dennis. And he actually put an ad in the newspaper and recruited a bunch of people, just people who have never traded before. And he taught them a trend following technique that he taught to these people. And they all became very successful. Some of them dropped out. And that's the story of how anybody can learn how to trade as long as they follow some sort of trend following technique. And it was stocks. They did trade stocks, so there was a bit more fundamentals. There was a little more fundamentals involved with that. Structurally, it was, I don't know if they were using supply and demand zones. Didn't seem like it. And then, of course, Trading in the Zone by Mark Douglas. You should always have that on your desk and read through it when you're in situations like this and you're just waiting. Cuts down on your anxiety. It's like, oh, should I take this trade? Just stick to the plan. That was the level that you chose. That's what you have to stick with. Trading in the Zone, an absolute must read. It will change your mindset about trading, and it'll allow you to stay in the trading business for the long haul. And that's what I'm in it for. I'm in this for the long haul. So I tell you, if it hits that level, the way it's acting here, if it hits that level, I think we're going to get a tremendous move out of this zone here. Okay, so looks like we missed this trade, unfortunately. Man, that really pisses me off. But it bothers me more because I was recording all of this and having a deep discussion with it about you, and it ended up missing. So we're breaking out of the opening range now, and it just never came back. Again, it's not an exact science, right, guys? It's not an exact science. This is the general area in which this thing, is going to reverse from, because this is a level of imbalance here, this drop-based rally that broke structure. And, it did come down to that area. It came down to that area. It did exactly what we said it was going to do. And there you go. There's the move. Unfortunately, when you are dealing with a certain amount of money, you have to be exact like that. If we weren't worried about the minutia of all of this, and we said, well, it came down somewhere, in between the opening range, just buy it. But when, we're not dealing with millions of dollars, we're dealing with thousands of dollars, and some people are dealing with hundreds of dollars. So this risk management becomes very, very important. And it's better to miss the trade like this than over leverage yourself and end up losing and really hurting yourself and your account and your brain. Okay. Not good for the heart and soul to over leverage yourself and then have the trade turn out to be a loser. So in this case, we did everything correct. It came down to that general area. Okay. Again, it's not an exact science. And lift off, right? So we missed it by a few ticks. Who knows? It might come back down. The day isn't over yet. We've got 8 seconds, 7 seconds left. This candle is going to form very bullish. Okay, it has broken past these two candles here, and here's your rip to the upside. Now, is there a temptation to get in, here now? Yeah, of course there is. But it's not what we do, right? It's not what we do. We make the commitment to this zone. If it hits it, great. If it doesn't hit it, then you just got to walk away. That is the big takeaway from this. We cannot just go chasing trades, like, oh, we missed it. Let's try to get in here. Let's try to get in here. Let's try to get in here. Look, it's done. If this comes back and hits this zone, great. This zone, this is holding. This zone, this area, okay, zone is just another word for area. This area here is the controlling swing low of this upward movement that broke structure and formations that broke structure. So this is a very, very significant area to look at. Okay, guys, so I'm going to end this video. It's getting a bit long. As you can see, sometimes the videos get a little longer when we have a live discussion, but I think you took away some very valuable lessons from this. Number one, how to find those strong supply and demand zones, and then apply that to a strategy like the opening range breakout, how to use the CCI indicator when we're pulling back into a level of demand, and making sure that that pullback is taking place either above the positive 100 line or the positive 0 or the 0 line itself, and how to be patient, what books to read, when you're being patient so that you don't go changing things around, and committing to a promise, committing to a level and sticking with it and making sure that it's within your risk tolerance so that you don't drive yourself crazy. This trade may still work out, so we'll keep an eye on it, but I'm going to end the video now, and I will see you in the next video, guys.